If you're tired of chasing noise and want clean, high probability Forex setups that actually make sense, this is the watch list for you. No fluff, just structure, bias, and execution plans. Let's get into it. In case you're new to this channel, I'm Kojak's Pro, a swing trader, and I've been at this game for over 3.5 years. If you know how to trade, Forex will be an enjoyable thing to play with. I'm not saying it's going to be easy because a game is enjoyable, but not as a beginner. Eventually, once you get the hang of it, you get to master all the tricks and ins and outs of the game. You become a master of the game, and then everything becomes, blissful for you right from there. That's just how Forex is as well. If you get the hang of it, you understand price action, you understand your trading edge, you are well on point with your mentality in the game, which is about the most important thing here. You will find out that most of your predictions are going to be coming true, just like we made some forecasts last week about BTC. BTC is well on his way to $138,000 per coin, as I said in my last video. Actually $139,000 per coin. I did mention here that if Bitcoin crosses the $112,000 mark, that is going to hit $139,000 per coin next. And now currently the market has soared so high that Bitcoin is currently trading at $118,000 per coin. I made a tweet about this. I also put it in my Telegram and Discord group. That's to show the power of making pinpoint analysis. And currently now, it's reached its highest point has been $123,000 per coin. We'll be seeing that shortly in the charts. But then that is how we trade. We only want clear direction. And I made that forecast here that if that happens, next is this. If this and this and this happens, this is next. That's how I trade. That's how I see the market. I don't have anything blocking my view from what the market is telling me. And that's how to go about your trading. I also made some other forecasts about gold. I told you guys that if gold keeps on hanging around that position where it's been for a while now, it's in your best interest as a trader to leave it, or else trade to the upside. Don't try to trade gold downwards because gold is not showing any downside yet. I know currently now it looks like the market is ranging, but we have a trend line. We have a trend line that is holding gold in place now. So be wary of that, and we'll be seeing that shortly in the charts as well. And some other nice setups I'm going to show you guys shortly as we get into the chart. So stick in there. If you're new to this channel, you're going to love the amazing stuff we do here. We break down the charts, we predict pinpoint trades, and they take profits. And you're going to be seeing here now. So if you're new, just subscribe and let's get into the video. So the first on our watch list will be Euro USD. I'm going to be going through my watch list and show you the trades I'm looking at shortly. So let's start with Euro USD. So this is Euro USD, guys, and I'm going to be showing you exactly what's happening in Euro USD. So Euro USD on the monthly time frame is saying we're bullish. However, you've seen these key zones have been plotted here. Euro USD hits a key zone and then is already now rejecting to the downside. You can see that. You can see the bearish rejection right here after hitting this key zone. And I'll tell you why. I'll tell you why this happened. So let's go over to the weekly time frame. So on the weekly time frame, we can see clearly here that that zone was marked out, and we did have a trade to the upside that went all the way there. I told you guys that what these key zones are legit. These key zones are strong. These are key zones that are mapped out on the higher time frames like the weekly and the monthly. You do not want to toy with these key zones. I've seen it happen several times, and that's how I trade. I trade from zone to zones. When I know that price is likely to react around the zone, I trade cautiously. I take my trades before that zone gets, hit or breached, and I wait. Just like in this case with Euro USD. So I'm going to be showing you. If you go back in time, this is the weekly time frame. If you go back in time, you can see that this zone had a reaction here, and this happens to be a chart pattern. You can see this is a chart pattern. This is the left showed the left top actually and the right top, and then this is the neckline. So this was a double top that saw Euro USD to the downside, and it has a neckline. So this zone is simply the neckline of this double top. That's how you mark your key levels. And when I did spot that and we had a trade to the upside, I told everyone that once we get to that level, I'm going to wait. So you can see what happened here now. This is the daily time frame. So I'm just going to. So this is the daily time frame now. You can see that Euro USD got to that level and then has started to reverse back to the downside. Why is this happening? If you're a newbie trader, you might not be seeing these key levels because why? You're too zoomed in to the lower time frames, the 15 minutes, the 5 minutes. I mean, what are you doing on those time frames when you can zoom out and see the bigger picture and trade wisely and trade professionally? This is how we see the markets and this is how we trade. We've seen that there's a monthly zone there, a strong zone at that. What do? We wait. By the time we had our trade that hits that zone, the trade started to reverse and we're really taking profits at then. I came here in my previous video and I told you guys that I'll only be looking to take more trades if we do eventually break above the zone and hold above it. But you can see clearly that that didn't happen. Instead, Euro USD has started to cross to the downside like so. It's already starting going to the downside. That's fine. That's not a problem. I did also mention that there was a minor level here. So this was, the market has making high highs around it. So this was the previous high that got breached here. So after price had breached it and come over to the monthly zone, all I was waiting is for a retest of this zone. And in the retesting this zone, we also had a trend line you can see right here. So we see that this trend line was in place. This trend line has how many touches? Let's see. So this is the first touch here. This is the second touch. And this happens to be the third touch. This third touch coincides with this level, which was the previous high that was made. So this previous high now, that was resistance has turned support. I was expecting this market, that if this market reacts around here, given that this is a support zone, this is also a Fibonacci area, and this is also a trend line zone as well. So this is confluence. This is how you trade. Let me show you why it's a Fibonacci area. So I was actually looking at this trade, hoping that price remains above it. It can still get above it. You can see clearly that from swing high to swing low, this is the 50 fib. So price is currently ranging at the 50 fib. All I expect from here is a reaction. If price reacts here in a bullish fashion, goes ahead to trade above this zone and above the support, above the resistance now that will turn support, I will be more than happy to jump into further trades for USD to the upside. So that's all I'm waiting for. But you can see clearly now that the market is hanging around there. So I'm just patiently waiting for USD. Those that are trying to take a counter trade to the downside for USD, you're doing yourself a great disservice. Why? Because the market, the odds are not in your favor. USD currently now is bullish. You shouldn't be trading in a bearish fashion. That's why you get wiped out so easily. Hold that thought. Let's go over to the next setup. So the next pair we'll be talking about briefly now is GBP USD. So this is my GBP USD chart. I'll show you guys why I say Forex is easy. So I did come on here last week and I told you that we've got two zones. So this is the first zone. This yellow area is the first zone, which was a resistance down support. And then we've got a black line here. Let's just quickly go over to the weekly time frame. You see this black line clearly. Now this black line signifies is a very important zone. And that happens to also be, just like in the case of Euro USD, this happens to be the neckline of a chart pattern. You can see that this was a chart pattern that formed on the weekly time frame for the pound dollar. This is the left shoulder, this is the head, and this is the right shoulder. So this was a head and shoulder pattern that formed that saw GBP USD to the downside. Now the market has come there. I knew that the market was going to react there. I mean, it's just a matter of taking off. If you just take off this black line, you will now be more like trying to trade blindly. And that's not how we trade, because we would love to see the market for what it is so that we can trade accordingly. How did I know that that level is going to hold? Because principles of price action says that once we break a zone, we head to the next zone. Now we've broken the supply region and the supply region has turned it to a demand region. We're going to head to the next demand region or the next zone, the next supply region or the next zone. That's how we trade. So I knew that that black line is going to be, I'm just going to put back that black line. That black line is there. Any trades I'm taking around that point is null and void. I will not be trading in the direction of the trend. And I did show that here when I drew this ellipse to right here. At the time the market was ranging around here, I told everyone that as far as the market stays in this zone, I'm not going to be taking further trades. If it comes down, fine. It's coming down. It's only coming down to give us a pullback. And we love pullbacks as traders because pullbacks gives us the opportunity to jump into more trades. And that's how I love to trade. I love the markets to go and then retrace to a contentious and interesting area on the chart, such as a support and resistance zone, a Fibonacci area, the 50 Fib to be specific, and the touch of the trend line. Once all these align, I get into my trade, and that's how I trade. So in this case now with GBP USD, what's happening really on GBP USD? I'll just take out this now. Take this out to see what's actually happening on GBP USD. So simple, because we have a trend line here. All I'll be waiting for GBP USD is to, okay, let's just see the Fibonacci for this move. So this is from swing low to swing high. You can see that the 50 Fib aligns well with this zone, with the zone marked in yellow. That's to show you that these zones are legit. And the earlier you know about them in your journey, the easier your Forex trading journey is going to be. I mean, that's why I'm here. I'm here because I've taken all the losses. I've gone through all of it. I've blown a lot of accounts because I was oblivious of these things, and now I know them. It's made me a better trader, and I now trade with vision. I now trade with clarity. I now trade with purpose and structure. At my side, I trade in the direction of the trend. I have the bias in place, and I'm conforming to the context of the high time frame bias whenever I'm placing my trades. If the market is telling me I should trade only to the upside, I have no business trading to the downside. That's how you blow your accounts. Understand? So be wary of that, and that's what I'm here to do. These zones are here to guide you how to trade. And in this case, you can see clearly that the support area, which is the area I'm highlighted in yellow, aligns clearly and well with the 50 Fib area. If the market holds around this area, which is what I'll be waiting for, I will watch GBP USD in a few days time to see whether it actually respects this zone, because the truth is, I'm just even going to go to the monthly time frame. Yeah, we can see you see what's happening on the monthly time frame. That's why I'm kind of looking at GBP USD in a different fashion. It's slightly different from Euro USD, because in this case, on the monthly chart, you can see that we are having a very strong bearish rejection. Look at this, guys. This is a bearish engulfing candle. I mean, the previous months of June for GBP USD is now being totally engulfed by this month of July, and we are still just mid-month. So when I see this happening, I know that GBP USD has more momentum to the downside. It doesn't mean the trend has changed. It's just that I'm seeing what's happening on the higher time frame to inform my decision on the lower time frames. So that's why I say, whenever you're not seeing a clear setup, do not trade. Now you can see that because of what we're seeing on the higher time frame, the monthly time frame, a bearish engulfing candle, I'll be very, very cautious on taking any more trades. So all I'll tell myself now is, if GBP USD holds around this area and then gives us an entry opportunity, I'll take this trade back to the upside. But the way I'm looking at it now, it's not likely. So I'm just going to wait. So what's the next trade we're going to be looking at now? Let's look at gold. So gold, we have gold here. I told you guys, I'm not just going through most of what we've talked about before. Gold has this trend line, which I drew here on the daily time frame. And my last video, I told you guys here that gold, it made a first reaction here at this zone, the second reaction, the third reaction didn't break the zone, and we had this trend line in place. So I told you guys that do not try to trade gold to the downside, even when this trend line, peradventure, this trend line is taking off. Do not still flip your bias on gold yet. If at all, and I categorically made this statement in the last video, if at all you want to take any trades on gold in a particular direction, let it be to the upside. There are no clear takes on why you should do that, but probabilistically, you have better chances of hitting take profit with trading gold to the upside than to the downside. And that is because gold is, for one, bullish. And next, the market is very, very uncertain. We've not taken out this trend line yet. So I said, if this trend line is not yet taken off, you have no business trading gold to the downside. And myself, if I really want to touch gold to trade to the downside, I will only wait for this second zone to be taken off, because this is where structure is. If this second zone is taken off, then I'll be confident to trade gold to the downside. For now, not touching gold now. So you can see clearly that after I say that, because gold was trading here right about then, gold went to the upside, went back to the upside, and seems to be having a further bullish fashion. That is how we trade. When I see that something is likely to happen, I might make my predictions, but I will not touch it. I will not touch it until I get my A+ setup triggered before I enter into such trades. So that's it about gold. Let's go to the next chart. The next chart we'll be talking about is Bitcoin. Now, Bitcoin is awesome. So this is Bitcoin, and just take this out quickly. Yep. So this is Bitcoin. I'll take this out as well. I remember coming here the last time and telling you guys that if we break this level, because Bitcoin as at the time, I'll go over to the 4-hour time frame here. Bitcoin as at the time was trading right about here, if I'm not mistaken, somewhere around here, either here or here, one of them. Bitcoin was around there, and I was not interested in trading Bitcoin to the upside. There's clearly a monthly zone there. There's a key level here, which is the area marked in beige color. Which is this. Just take this out. So which is this area, which is this zone. So this is the monthly zone here. So Bitcoin came here, retested this zone. I was not interested in trading Bitcoin to the upside because it's not yet hit my setup. We still have an important zone to take care of, which was the previous high it made. So I told you guys that this previous high is at the $112,000 per coin mark. If Bitcoin breaks this zone, the next target is $139,000 per coin. You can see it's clearly my target is still clearly put there. Now Bitcoin, you can see this break that happened right about here. So I'm just going to zoom in on the chart so that you see this. So by the time there was a full daily candle, full 4-hour candle break above it. So this full 4-hour candle break above, you can see that after that, Bitcoin started soaring to the upside. No hindrance. How did I know this? Price action, structure, experience. I told you guys that I see the market for what it is. I knew that this kind of thing is going to happen. And I said that if this zone is broken, Bitcoin is going to soar to the upside. The full target has not been hit, but you can see the momentum, guys. See, after just this full bullish candle break, see the way Bitcoin soared to the upside. So now Bitcoin has now been added to our list of likely setups, because I love the market to go or give us a nudge as to the direction you want to go, and then come back to us and knock on my door. So you can see now Bitcoin is making that pullback now currently. So I'm going to be watching Bitcoin likely. So this kind of pullbacks give us a chance to enter this trade. I mean, you can be entering Bitcoin trade as at the break here. Even if I said it, I don't just enter it here. Because if I enter here, where are you going to put your stop loss? Where are you going to put your stop loss? The market behaves erratically. So you need to gauge your trades as a trader. And I'm a swing trader, so I trade a large amount of money. So I take my trades cautiously and professionally. Now that Bitcoin is now pulling back, I will be interested to enter. And Bitcoin now currently is trading at $118,000 per coin. Oh, Bitcoin, I just want you to calm down and give us this setup. I mean, you're already doing it. Just keep up the good work. You know, that's how I speak to the charts now, because I can always tell the way these charts are going to behave. These currency pairs, by the time I see what's happening on the higher time frame, I can tell where the market is going. And this comes with experience. This comes with thousands of chart work. Understand? Now let's go over to our next pair. So Bitcoin is one of our watch list. Then the next pair we're looking at is GBP-JPY. Now GBP-JPY, you can see what's happening on GBP-JPY. Now GBP-JPY is one of those trades that I told you guys here that if GBP JPY, so I'm just going to bring out my highlighting tool, because the last time we were here, GBP was trading around here. I say, and if I'm taking any trades below this zone, because this was the last high made, this was the last high made, previously for GBP, which was this high made. So I've drawn it all the way there, and the market is now trading right about there. So I told myself that if GBP JPY goes and hangs around there, I will not be taking any further trades. If I do so, I'm going to have to reduce my risk. I said it here. And GBP JPY came back and retraced and then started coming up to the upside again. I mean, it's trying to do exactly what we said, but I'm not really comfortable entering a pound yen trade now until this level is taken up. The 199.800 level is taken off. Once that level is taken off, just like we predicted for BTC, once this level is taken off, I'll be waiting. I'll be very well waiting for my triggers on bullish trades for GBP JPY. If it's not done that, I'm not impatient. Understand? I'm not in a hurry to reduce my risk just for a trade that I don't have the maximum probability to my favor, and it's not even entrenched in my setup. I don't take those kind of trades anymore because I know better. So GBP JPY now, the simulation still remains. All I need is for this break, just like we've highlighted it here on the chart. By the time it breaks above that zone and gives us a retest, like a pullback, we'll jump in for more trades, and that's GBP JPY. The next trade we're going to be looking at now is AED CHF. Now, the last time I came here, we touched briefly on AED CHF, and as at then, the chart was somewhere around here. And I told you guys that this is this level. AED CHF is bearish. There's no doubt about that. I was expecting the charts the price to hold around here, but you can see that the price just blew past this level and it has come and retested it. So AED CHF is looking like this. It doesn't mean that it might not eventually come back to trade below the yellow zone, which is the daily zone. This daily zone highlighted here. If AED CHF comes to trade below this zone again, then I'll be ready to launch my sell trades on AED CHF. But that has not happened. And as a matter of fact, going by the laws of price action, we have broken structure. We broke structure right around here with this break. So this break is break of structure, and this is a retest of this, technically a retest of it. So I don't see AED CHF coming back to this zone unless it holds there and eventually the market momentum kicks in for a continued bearish trend on AED CHF. For now, I'll just be watching it. It's not even on my first list of pairs for now, but I mean, the moment it broke above this zone, I just kept it one side because I know how these markets behave. Understand? And I know better than to start trying to jumping into trade entries there that it's not going to serve me and my capital right. So I'll just leave AED CHF for now. The next pair we'll be talking about is GBP NZD. Now GBP NZD, very, very interesting. Very, very interesting. GBP NZD is bullish, just like GBP USD. GBP NZD is bullish. There's no doubt about that. And whilst we were trading to the upside, we drew this zone right here. After we had a break, after price broke above this counter trend line on the 4-hour, I was not quick to enter GBP NZD because my stop loss would be very wide. And as a matter of fact, it was very close. This break here was close to this region, which is the take profit region, and the 100% retracement. So I only was expecting to take more trades on GBP NZD if we break above this zone. So that's why this zone is highlighted in orange here. I was waiting for GBP NZD candle, and as you can see, this is why I always like to have clear directions in my trade on currency pairs. Just like in this case now, I said I only want to trade GBP NZD if we break above here, and that didn't happen. So GBP NZD came here from the double top on the 4-hour time frame and rolled back over to the downside. I've been in these situations in the past when I would take a trade and will be wanting the trade to go as planned, and my stop loss will be where it is. I will not be, taking profits as they get to certain levels, and I'll just hang on and expect the market to give me all the profits with all the tangential moves it's going to make. But now I know better, so that's why I'm telling you. That's why I'm telling you here that GBP/NZD is bullish. However, I'm not going to be taking any trades on GBP/NZD until this zone is taken off. That's it. What next? Now let's go over to the pair USD/CHF, my top list for now. Now USD/CHF is trying to give us a setup. It's trying to give us a setup. Isn't it nice? I mean, USD/CHF, you can look at it. This is bearish. It's bearish on the monthly, it's bearish on the weekly, it's bearish on the daily, and we have a daily zone marked in yellow there, and price has committed into that zone, like you can see. And then this is the 4-hour time frame. Now you can see that price has come back to retest this zone right here, and we have a counter trend line in place. Believe it, guys, that this setup, I mean, you can see that I have an alert already set in place for this trend line. Once this counter trend line is taken off, price is going to come here and react around here. So this is support, this area is resistance, this is our counter trend line, and also you're going to see that this is a Fibonacci area as well. So this is the most recent swing, most recent high to the most recent low. You can see that we're right about at the 50-50 area as well. Easy, clean. So all I'll be waiting for is for that level to hold. Hopefully it doesn't do like AD/CHF. This is USD/CHF. I don't expect it to be like AD/CHF. So all I'll be waiting is for that zone to hold, and the market comes down to break out for our counter trend line. We get into the trade snappily, put our hard stops, and I'll take profit and make our money as easy as that. So that is it for today, and that is what I'm watching for this week. So that's it for this video. I've led you guys on the way I analyze my trades: clean, smart, structural, and professional. If you want to learn to analyze and trade like I do, with structure, confidence, and no second guessing, drop me a comment saying trade like Kojak's. I'll reach out or drop some next steps to get you on the path.